Bring in Benchmark Company Managing Director Cody Acree. Cody, I want to start with ARM here, and particularly what some will call a weak guide after some solid results. How does that, does the after hours move here in overtime, is that justified based on this guide?
I think it is. I think the expectations for ARM were pretty high. They turned in a pretty solid March quarter with a little bit of upside in revenue and inline EPS. But the outlook for June is weak by about 45 million and light on the EPS by 8 cents, which I can only attribute that to softness in the smartphone market, as they likely saw some pull in of royalty revenue into Q1. That's cannibalizing their Q2 outlook, and that accounts for the sequential decline. Now, that's in contrast to what we saw from Skyworks, which guided above consensus by 21 million and 18 cents, likely on Apple's strength. Expecting that is about 70-ish% of their total revenue on overall smartphone revenue. So a bit of a dichotomy between what ARM and Skyworks are saying, but all of it levered largely to Apple and the smartphone market.
Cody, staying with chips, but widening out a little bit here. We've had AMD CEO Lisa Su and Nvidia CEO Jensen Huang on CNBC just over the past day talking about the impact strategically, competitively of chip curbs, potentially when it comes to China. Here's what they said.
China is an important market. China is a large market, and there's a balance to be played between, sort of restricting certain chips and enabling sort of the larger access to the market, which I do agree that, there's a large opportunity there.
China is a very large market. It's probably going to be a $50 billion AI market in a couple of 2-3 years. It would be a tremendous loss not to be able to address it as an American company. It's going to bring back revenue, it's going to bring back taxes, it's going to create lots of jobs here in the United States.
Cody, how should investors interpret these headlines until we know more, given that there's more than China involved here in these global chip curbs, and the U.S. is in the middle of trying to start a negotiation there?
I think the outlook is what's most important here, and I think the future of trade imbalance or trade tariffs are likely to continue to be pretty volatile, with curbs going on in the AI processor market, the AI GPU market. That's restricting Nvidia by about 10 billion of revenue into the next quarter, and it just hit AMD by about $1.5 billion into this last quarter. And so just ostensibly cutting off Nvidia and AMD from the China market as a whole, just at a time when the AI trade is actually starting to recover.
So say we don't actually see that I guess, reemergence of trade flows for those most advanced AI chips for American companies like Nvidia and AMD to China, but you do see some of those export restrictions on allies like the UAE and Saudi Arabia, with President Trump going to the Middle East next week, erode, and some of those markets further opened up. How much does that offset the China impact?
It's possible that it offsets a portion, but it's going to be more of an incremental, modest portion to offset. China is by far the biggest growth economy outside of the U.S. for AI. Their development of advanced large language models and inference platforms is second only to the U.S., and they need processors to drive that. And the demand in China is extremely strong for both Nvidia and AMD. But unfortunately, these diffusion rules that looks to be setting aside by the Trump administration, that is going to treat country by country, like you said, easing UAE and other countries, but continuing to lean on restrictions in China.